Hello, class, and welcome to our seventh lecture series on financial accounting or principles of accounting. And I'm your instructor, Dr. Jamel. Okay, before starting today's lecture, I have an announcement to make, and that is our midterm exam is going to be on 9th of November, the same day, same class, okay, during the class. And please do not book any commitment on 9th of November. Okay, we still have 2 weeks to go, more than 2 weeks to go. So please do apply for, anything, don't book anything urgent. Do apply leave if you have to apply for leave, because there is no makeup to be given after we have conducted the midterm. Okay. So what chapter is going to be included? 1, 2, 4, okay, including this chapter as well. So today we will start chapter 4, which is internal control and cash. So remember, up till now, what we have done, we have now understand that how to make balance sheet, how to post the entry, how to generalize the entry, how to make income statement, how to make routine earning statement, right? Balance sheet. So now we will be talking about how we account for each and every item in balance sheet. So balance sheet starts from cash. So today, and I think in our next lecture, we will be finishing how we account for cash in accounting system. And then we go for, account receivable, and then inventory. And then on long-term assets, we talk about the plant, machinery, equipment, right? Over there, we'll talk about the depreciation as well in detail. And then we go to the current liabilities and long-term liabilities. And then at the end, we will be finishing our discussion on owner's equity. So now you have the, the idea that how we will be taking this course to the next level. So we start from here. Why we are discussing the internal control, because the most sensitive stuff and also any blood of any organization is this cash flow. And it is also the most vulnerable if you just leave it like that. So you must establish some kind of control on cash, because it is the most liquid. It's easy to steal. It's easy to be, do some fraudulent activities. So let's just talk about, first of all, how to establish internal control, and that is a theoretical perspective. So let's first have a discussion on fraud and its impact. So let's describe fraud and its impact. So fraud is basically intentional misrepresentation of facts. What do we mean by that? Okay, if we separate the human error is not the fraud. For example, I received 5,000, but instead of writing 5,000 or entry in my computer of 5,000, I mistakenly wrote 500. But this can be rectified, right? How? When you see the bank, the customer deposited 5,000, and then okay, on that day, maybe 1st of November, there is a deposit of 5,000, but I have written it down 500. So it's my mistake. But intentional misrepresentation of fact is that you also submitted 500 in the bank, received 5,000 from customer, and 4,500 you take it into your pocket, because you are also an accountant, and because this should be matched. So there is no, you can say that misrepresentation or any kind of like imbalance in the statements. So you smartly played with the entries, and what happened here? You deposited only 500 rather than 5,000. So, okay, Momo, I got your chat. Okay, so plus when you do intentional misrepresentation, remember it causes injury or damage to another party, right? You are damaging the business, you're damaging the customer relationship, damaging the property of the business as well, business assets. So these frauds has increased. So these fraudulent activities have increased with the expansion of e-commerce, right? Instead of giving company's bank account, you gave your personal bank account or your friend's bank account, and then you commit a fraud. So sometimes some common types of frauds are insurance fraud, check forgery, Medicare fraud, credit card fraud, identity theft. Now nowadays this is becoming more and more, getting more and more attention, and we should address that one as well. Someone steal the information of a manager and pretend to be the manager and ask the customers to pay to a different account. Okay. Now, there are two common types of fraud that impact financial statements. So there are many frauds, right? But we will be talking about here those frauds that have a financial impact on our business, on our financial statements. So number one, misappropriation of assets. So these are committed by employees. For example, theft of money, inventory, right? Bribery, kickback schemes. Okay, I'm gonna give you, okay, because we are having a shortage, so you take on the goods. For example, there are 100 orders and you have capacity to fill only 90 orders, right? And you ask your customers, if you pay me extra, I will be fulfilling your orders. Otherwise, you will be in line or something. So you are taking some kickbacks or bribery. All right. Overstatement of overstate expense reimbursement. For example, the company gave you a TADA, traveling allowances, and maybe you go through by local bus or through train, and you are reimbursing the fare of having a private transportation, or you travel through economy class and you are claiming the business class ticket. So these are called the overstatement of reimbursements. The company gave you for food expenses, so you ate in a normal restaurant, but you presented the bill of a 5-star hotel. So these are some misappropriation of assets frauds, and mostly committed by employees. All right. Now, fraudulent financial reporting. So these are committed by managers, because employees, they don't know much about the accounting. All right. So financial misreporting or fraudulent financial reporting, these are committed by managers. Like I told you, customer gave you 5,000, you recorded 500, and 4,500 you took in your pocket. And you play very smartly, and you put the right entries, nobody can guess out. Trial balance is equal, balance sheet is equal, all right? So their focus is to deceive investors and creditors. And they are, doing this to false and misleading entries in the books. So my question is, which one is, which one impact more than the other one? Misappropriation of assets or fraudulent financial reporting? which one is more harmful, which one is more magnitude in terms of fraud? You tell me, either this or this, 1 or 2. Marco? 10, 2. Okay, Priscillo?
2 as well.
Okay, Subhan, Venetia, Noon?
2 as well, sir.
Good. Because the magnitude here is small, but here the magnitude is so large, right? So the most, terrible or horrifying fraudulent activity are committed by the managers. We call this white collar crime. Okay, and their magnitude is so huge, like in millions of dollars, 500 million, 200 million, but they committed only on thousands or maybe 100,000, 200,000 cumulative all the year. But this one is 200 million, 300 million, 400 million. Okay. So there is a striped fraud triangle, which means if you understand this triangle, then you are basically eliminating fraud from happening. So fraud is basically ultimate unethical business practice. All right. So fraud triangle is that fraud occurs because of 3 things. Number 1, motive. Do we have an example? No. So what is the motive? If you yourself have some kind of motive, okay, I need to do this fraud. If you yourself are very unethical person, you are involved in illegal stuff. So mostly this arrive from, this can be solved by hiring smart management. You have a background check of the employee, whether this employee is, what is the character of this employee, whether it has illegal, any kind of illegal acts involved or any kind of, jail stuff or this kind of stuff. You ask history from his previous employees as well, whether he is motivated to fraud or not. The second is opportunity.